The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. We're going to start out today with the metals, of course, because they've been hit pretty hard last night. This all started when the Australian market opened, and both Australian and New Zealand mining stocks just got hammered. They were down somewhere between 7 and 15%, depending upon the ones that you were looking at. But that was the reason that I believe that happened to the market. Now, Bloomberg reported that it was Chinese selling, and if it was Chinese selling, gold would still be going down. I don't believe China is going to sell the gold. That's just my opinion. But if it was Chinese selling, we wouldn't know anything about that. And if it was doing it during the market hours that was that thin, it would still be going down. So that's basically it. Now, the next the chart that I posted in here was that daily chart we've been watching on gold. Remember, we were watching Friday. We were watching that 1135 level. It hit there. It's went down to 1130. Just didn't work. And then last night it opened at 1132. It was up about $1.50. Made a new low at 1128, and then hung there for about a half an hour. And then on the half hour, when the Australian market opened, it just literally dropped in a matter of a minute or so. It went from 1132 to 1080, just straight down. Then it bounced up to 1110, back to 1085, and then up to 1118. Now, the whole world is bearish gold now. I mean, there's no ifs, ands, or buts about it. And I believe we were looking at some of these targets, as you can see. We had the first one was at 1135, then we had the next one at 1085, and we've got another one down there at 1060. And whether that's going to be any type of a bottom or not, I don't know. On the long-term weeklies, we've broken through all the 618 retracement levels at that 1135 level that we talked about many times, and this market is still heading down. Now, we have a situation in the gold bulls and bears index, because we have now made history. We're at our second largest number, the lack of bulls. There's less bulls now in gold. There's only one other time when there's been less bulls in gold, and that's when gold was at $260 back in 2003. So we're probably over a pretty significant bottom here. The $64 question is, what's going to take it to, make it change? I'm not sure. We had tremendous moves in other metals. Also, I wanted to bring to your attention the platinum, because it was another one that went way through the ABCD patterns and had another pretty good bounce. It's bounced $40 off its low already. However, there was just a lot of selling came in on that time frame, and it was very fast. I mean, it was not consistent selling. It was selling that was really gotten out of the way quickly, and then we'll see. But if the market closes in the upper part of this range today in any of these metals, gold, silver, and gold and silver and platinum, that would be a hanging man pattern, which is the mirror image of the shooting star, which are the most bullish and bearish patterns that we have in candlesticks. So that's the main thing. So that's what I'm seeing in the gold and silver. Whether that's going to be the case or not, we have to wait and see. I want to spend some time here. We have Rich Anderson coming on at the break. We have the greenhouse effect going on in the grain markets, where we've had tremendous good weather, nice hot weather with a lot of rain, and that's caused corn and soybeans to sell off, which is sort of good for our service, because we got short the corn up there on that high, and we got when the trading gods were favorable that day, so we held up, and we'll see if that's going to be the case. Now, what I've done here is I've prepared something. I don't know if you folks are, hold on one second. I don't know if you're aware of this or not, but I was not until I worked on it this weekend. I wanted to find out, what was happening with this NASDAQ, because it would, when a stock gaps up $90 like we had with Google, even though it's a, $100 or $600 stock, it's still something to really to pay attention to. So I went in and I checked the NASDAQ 100 as of May 31st, and there are the 100 stocks in there. As you can see, the top 10 stocks: Apple, Microsoft, Amazon, Google, Facebook, Gilead, Intel, the other class of Google. They have Google A and Google C, so they get double weighting. Cisco and Comcast, these are the stocks that are in there. That's 48% of the NASDAQ 100, folks, because it's capped weighted. And you can see 14% of it is Apple. And with Apple up $2 a share today, is it any mystery that we're not higher in the NASDAQ? So that's what we're looking at these particular times. I'm going to just do, I'm not going to do all of these because I don't want to bore you, but the first one I wanted to do for you would be Google, because we had Google was up 18%. We're making a 1.618 expansion of the yearly high up here at the 674 level. That's whether that means anything or not, I'm not really sure. The next one we're going to take a look at here is Celgene, which is in the group, and you'll see that it is also making a 1.618 on the last weekly charts or daily charts, and it's also a 3 drive to a bottom pattern. See, we had another one here, was Comcast. This is the stock I dislike the most because I don't like the company, even though I have to use them. They're just too darn greedy. And the reason for it is their stock keeps going up. But we have multiple ABCDs up here at the 65 level. We closed at 64.27. And whether these patterns work or not, I don't know. But frankly, I went online and I checked with this guy, Isaac Newton, and maybe what's happened is that we have a situation where the market is really, there is no such thing as gravity anymore. Maybe it's just taken off the air, and we'll have to take all of his awards away from him. I don't think so, folks, because Isaac has been pretty smart through all these years. Okay, now we got earnings for Apple coming out pretty soon. We want to certainly show that one to let the folks see what we're looking at. We've had a lot of patterns, but we could easily see Apple at another expansion up there at the 140 level without too much trouble. We're leaving gaps all over the chart on some of these things, and that is in itself not a very healthy thing. I know it looks healthy when you're long, but frankly, that's not. This is how bull markets end, folks. They don't begin like this; they end. So be really careful. That's the bottom line of what I'm watching here. So keep an eye. But these are some of the ones that I'm watching. For what the patterns are within that NASDAQ. But when you're doing the NASDAQ, remember 48% are in 10 stocks. And when you stop and think what they're doing, it's whoever they is. It's really it's a bifurcated market, as Basil would say. If we take a look at the overall market itself, the New York Stock Exchange Index, you're going to see an interesting situation here because, we have just gone up to the 61% retracement perfectly, and we did it on the narrowest ranging day in the last 5 years, last Thursday. So that's what we're watching at that point. So be really careful here. I don't know, but we're going to be higher this morning because we're a little higher in the S&P, and we're probably going to be a little bit higher in the New York Stock Exchange Index or not. But the question is whether it's going to be to the point where it's going to make any difference or not. We'll have to wait and see. But this is a normal correction in a bull market, as near as I can tell. Now, there are a couple of stocks here. There are a couple of indicators that I think we really if I can get it to come up. There we go. If I can get it to come up. The first one we're going to look at here is the New York Stock Exchange Advanced Decline Line. Here again, you're going to see we had that spike way back on the 10th of July when the market was up 300 points in the Dow. Since that time, you can see there's been more declining issue than advancing issues. Not a very positive sign for the market, but because of the NASDAQ the way it is, it's going to continue to do that. That's the way it looks. Now, the next one we're going to look at are the number of new highs to new lows that are being made in the market during this time. And again, you can see that we've been in a consistent downtrend ever since March 19th, and it's just there's more new lows than new highs by quite a bit. More than 50% of the stocks on the New York Stock Exchange Index are below their 200-day moving averages. So that's another thing that we have to look at. Now, one of the big movers of the market, which has been the biggest bull market of all, has been the biotech index. And as you can see, you know, we have made the ABCD leg from 2011. We had the 38% retracement back in 2014, and now we've gone up to the 1.618 expansion. But that doesn't mean it's going to stop there, folks. This thing is parabolic, and parabolic markets go a lot farther than you might think. All I believe is that once it's over, it's going to be over, and it's going to take its toll. Hopefully, we'll see what's happening in. We'll be able to see if that's going to be happening with it very soon or all. Let's go on to, so someone has a question about the gold, the lowest price that we had. I believe the lowest price we got for gold back in 2003 was at 260, as I recall, 260, 265 into that zone. But this got a lot of news today with gold being down $50 overnight. And then we'll see what's going on. The news is that there's one of the analysts came out and said Apple was going to have some really good earnings, which no big surprise. They always have good earnings. And the fact is that's one of the things you usually don't want to do is to go into an earnings report against Apple. I think the odds are 85% against that. Now we have a situation in Apple where we don't have any bears left. Everybody is bullish that stock again, just like they were when it was at 703 before it went down to 385. So Mr. Newton his laws are still pretty good. They just haven't it hasn't happened yet. But when these markets are gapping like this is not a bullish sign, folks. This is how markets end, in my opinion. And the reason why you say that is the let me in system, or let me in syndrome. You know, God, I've missed the whole thing. I better buy it now. And, you know, you'll know when it happens. It'll reverse very, very quickly. That's my opinion, of course. And, you know, whether it's right or not, I don't know. But I do know that those 10 stocks that I just mentioned, you know, those are the ones that are moving that NASDAQ. There's a few others, of course, but these are cap weighted, so it doesn't take much for it to, you know, you get Apple's 14% and it's up $3 a share. You don't have to be a rocket scientist to realize that index is going to go higher. You know, so that's the bottom line of what we're looking at. Okay, we're going to come back. We're going to take a look at the foreign currencies, and we'll have Rich Anderson on at the break.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we've asked, one of our dinners have asked me to take a look at natural gas, and if anybody is a professional at natural gas, it would have to be me. As you can see here, we've been in a downtrend. We just tested the 61% retracement again up at the 219 per cubic feet level, and now we are down at the 279 level, and it's a factor of all the commodities are getting hit, folks. It's a red board up there today. You got to be hard pressed to find a commodity that is in the green, which is really amazing because we've been in this bear market in commodities for about not counting the rally we've had in grains, but the metals and everything for well over 18 months. And during that time, the stock markets have been going higher, and it would make you think that possibly, why aren't these commodities being absorbed to make the products that people are buying? Now, I realize that there's a lot of social networking stuff and Google type things and stuff, but even Amazon sells a lot of products and stuff. But why aren't people buying these products to make, or buying the raw materials to make the products? It just does not make any sense to me. But doesn't necessarily mean it has to be that way, but that's pretty much it. We also have that situation going in China, that we've got a situation where we've I love this one. Hold on just one second. The old boy did something right today. Hold on a second here. Okay, we got a situation here in the let me get this thing up here so we can look at it. Doggone it. 1 second here. This is the This is the Chinese. What is wrong here? Hold on just a minute, Larry. There we go. There we go. Now here's the FXI, which is the Chinese market. Evidently, China has made some rules about the online brokers can no longer loan money out, which also is going to stop any new buying. The market was up a little bit today over there, but unless my charts are totally wrong, there's a big problem over there. Whether they report it the way it should be or not, I'm not sure. Maybe it it's hard to trade anyway, but it's got all the characteristics of a potential major crash. That's what it has. That's the bottom line. Someone asked me the question about whether the situation with the euro is over or not. Folks, I have no idea, because I don't find the fundamental stuff very interesting, because it's just too confusing to me. So I sort of stay away from that. But we will take a look at what the euro is doing here, and it's basically, if we look at the daily chart, you can see that we are heading down. It's just a question of when we're going to get there. We've had a couple of tiny bounces of 30 or 40 pips today, but it really hasn't made any difference. I mean, the euro is still going lower, and that's another reason why the commodity prices are going lower. The only question that I have, if someone could explain to me why commodity prices are so low and stock prices are so high, it just does not make any feasible sense to me from a standpoint of a simple economics of supply and demand. Now, I wanted to share you my partner Jim Bartolioni did a real interesting chart here, where he does a spread between the CRB index and the New York Stock Exchange index, and it shows you that commodity prices have been going down since 2009, whereas stocks have been basically going straight up. In other words, the CRB index has been going down, and New York Stock Exchange has been going up. This might be an area where it might be getting ready to change, but it has, this spread has actually completed a big ABCD to the downside. Remember when gold was at $19.32 per ounce, folks, back in, I think it was April of 2012, as I recall. You couldn't get anybody wanting to sell it. That's when we were having, a big drop in open interest at that time, as the market was screaming higher. And we were talking about that. Basil was talking about it. Mr. Z in the room was talking about it. I was talking about it. So it was telling you there was a really strong danger signals. We had silver at $49.90 an ounce, making new highs from 1980. And gold, of course, at all-time highs. And now we've got gold $900 an ounce under that, and it should be time for a bottom based on that gold bear index. When nobody is bullish, that's when these darn things rally. I don't know why they do it, but I don't think you can buy it here. I don't think you can buy it today. But let's keep it on the watch. Now I was long the SLV. I have a stop in. I don't know, but silver's unchanged on the day right now, so maybe my stop is going to be okay. I wasn't risking very much. We're going to have Rich Anderson on at the break, folks. It'll be interesting. We're going to be talking about soybeans and wheat and corn.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have our friend Rich Anderson on of Anderson Capital Management. Rich, are you there?
Hi, Larry. Good morning.
How are you, buddy?
Good.
Hey, listen, any news on the precious metals front? Was Lisa out there selling some of her jewelry last night, or what?
Well, actually, Tara was day trading. She's the one that called up and said, "You ought to watch this." I mean, it reminds me of the flash crash we had in the stock market. You know, I mean, why did somebody liquidate 1,000 contracts in a minute?
Yeah.
Especially prior to a major market opening. That's just a little unusual. We had that flash crash that was order entry error in the stock market several years ago. But we see this now and then. That's why you have to trade a little smaller. There's a lot of air pockets. You know, I'm constantly talking about that. We saw this in feeder cattle 2 or 3 weeks ago. There was like 1,500, 2,000 contracts got liquidated in a couple minutes. It dropped the market $4 or $5.
Yeah, even platinum dropped $60. You know, it's trading at such a discount to, to the gold. Rich, I had a question earlier before you came on the air about these commodities being in bear markets now for well over a year. Isn't that usually indicative of an economy slowing down when they're not buying products to build products? I mean, that's what it used to be, but maybe it's different this time. Maybe everything is social networking. I don't know.
Well, absolutely. I mean, the thing they've always told us was that the copper had a PhD in economics. And so if you really want to see what the world economics looks like, you look at the copper chart. And it hasn't been going up. The difference between when we were first in getting started many years ago and nowadays is that China is the big dog, and and they're a kind of a managed economy, much different in many ways than the rest of the world, and so they can kind of make water run uphill when they want to, but they're one of the big demand factors worldwide for energies, copper. Looks like we had the washout in copper, 2 weeks ago, and we'll see how it pulls back. And if it's orderly today, then then maybe things are better than what people think. It seems to me like the negative opinion has been because we've started to believe that Yellen is actually going to raise rates probably 2 times before the end of the year, and that's unnerved a lot of people. But raising rates will actually be a sign that, hey, the economy is pretty good. And I can tell you as an employer with the other outside business interests, it's a lot more difficult to hire people today than it used to be.
Yes, I know, because a lot of people finally found jobs after this time, that's for sure. Now, I believe that the Fed has a perfect storm to raise rates now with the stock market high and the economy turning. If something happens to us like what happened in China, they're not going to have that flexibility. But that's just my opinion. I called Janet, but she hasn't gotten back to me yet. I'll let you know if she does. Rich, I posted the chart of the corn in here, and I wanted to thank you for this trade setup that you gave us last week. We hit that 61% retracement, and we're able to get a little bit short, which was really nice. And tell us what you see about the weather now that we've got going in corn and soybeans, because we're having a little bit of a sell-off in these markets today. I think part of it could be just margin related too, couldn't it, from the metals and things?
Oh, absolutely. I mean, when these funds liquidate, or large specs, I mean, they liquidate across the board. The way the large funds trade, if they lose more than X%, they go flat for the month. So if they lose more than X% early in the month, they go flat, and then you've got a real quiet month. But as far as the corn goes, the crop conditions are during the summertime. They come out every Monday afternoon. They're generally thinking that they'll be a little better than last week, and we're talking 1% good to excellent versus increase, and it's minuscule, and it means very little, but that's what the market trades off of. Generally, this is the hottest week of the year, but there's no extreme heat any place. One interesting thing that might have impact in the future is that the Pacific Ocean has increased to 1.5 degrees centigrade in 1 month's time, and that's a pretty fast increase for watching for El Nino, which would impact crops in South America and Australia this winter. But a 3-month average is what you use there. I think the money flows in and the money flows out, and right now the money's flowing out, and that's why you have to trade with a trend. And the strength in the dollar, while it isn't extreme here this morning, it's still enough that it unnerves people, and they're really not sure what's going on in China. And frankly, this extend and pretend deal that they're doing with Greece to keep them in the EU, there'll eventually be a new government over there. I would expect they'll have an election by fall, and I think that'll be a continuing story. But they're the big dog. That's what everybody's really focused on.
Sure. Rich, I have an interesting story for you. My daughter called me last night to tell me they're having huge rains there in San Luis Obispo. 3 days in a row, thunder and lightning, just it never stops raining, coming down, like they say, cats and dogs. Well, the highway, Interstate 10, the largest freeway in the world, it goes from Santa Monica Pier all the way to New Jersey. The road into Arizona, the eastbound road, of high double lane, the bridge was totally washed out because of the underpinning of the rain coming in on the California side. They just literally blocked all traffic on that one. It's going to be blocked for several weeks now while they repair it. So they're getting torrential rains in California finally. Whether that'll be enough to help or not, we'll have to wait and see.
Well, they have to learn how to manage their water better.
Yeah.
they drain off the water into the ocean, and they're going to need to store it, kind of like they do in Lake Tahoe.
Mm-hmm. Well, that Lake Tahoe is one of the most beautiful places in the world, as I can remember. Rich, I would talk a little bit about soybeans. How does the crop looking there? Because we got a nice little correction here. We had one of 50 cents an ounce or per barrel. Let's try it again, per bushel, and we got another 50-cent correction now. Do you think if we get another 50 cents a correction, look for a place to be a buyer of these beans?
Well, you have two things. There'll be crop reports in August that will be new information for soybeans that could light them up. Right now, you've got in the beans, they're just acres that didn't get planted. Now, 4 states were resurveyed, and that acreage information will come out in the August report sometime after the 10th of August. And that's what that'll be the new information that'll focus on it. Right now, it's a concern about, what's our crop size going to be, and it's offset by what's our demand going to be. Demand right now is running relatively slow. And then when you compare us to the rest of the world, we're more expensive than South America. But keep in mind, when wheat was under $5, wheat was 50 cents more expensive than Russia. Russia is still the cheapest wheat in the world. And wheat went straight up. So where we are relative to the rest of the world affects prices over longer term, but on short term, it doesn't have a lot to do with it. And I think that, they're going to maybe check those lows out, and then they'll be nervous about pressing until they have more information about the acres and what the yield's likely to be. There's just less beans that got planted. And then the other thing is that beans don't like wet feet. One of the problems was it was too wet in the east, and
sure,
they don't yield as well when they're in damp, moist, soil. They need rain, but they don't want the wet soil. It's like plants that don't like wet soil. Some plants do, some don't. Beans are one that they don't.
Rich, I have one other question that someone's asked us, and I don't know the answer, but you might have an indication of it. On this Iranian agreement that we have, nuclear agreement, will this affect any of the markets as far as commodity markets go with this agreement that they've had? I mean, I don't know anything about those things. Maybe you could help us with that. I don't know anything about it.
Well, they increased the capacity of their storage by storing an awful lot of oil wet on board ships, and something like 35 to 40 million barrels. And the idea is once that agreement is signed, that oil will become relatively quickly available to the market because, they don't have to load it on a ship. It's already on a ship. They just have to give it a port, destination and get it on its way. And so that's the negative that's overhanging the crude oil market. And, we've gone past the peak driving season as far as holidays and stuff, and so the next big thing would be a heat wave, which might affect some natural gas, or hurricanes that would affect refining capacity. But yeah, it's all about all these wet barrels that have been stored by the Iranians that they now can just say, send it to China, send it to wherever.
Okay, Rich, one other question. A couple of weeks ago, we had you on the air, and you were talking about, we were looking at August cattle, and you said that they had a pretty strong possibility of getting down to the 145 level, and we hit 145 spot on, 145.60 on Friday. We closed a little bit up on the day. You still think we got a few more cents to go to the downside of cattle?
We may visit the April lows, which are around 143.95 back in April 22nd. I consider that to be value. But, the cattle are competing with increased poultry. Even in spite of the bird flu, they can ramp poultry production up so fast. And our hog numbers, which seem to be relatively high, there is a little bit of concern that some of this hot, humid weather is restricted gains a little bit, but we just have a lot of protein out there to compete against. Nevertheless, I think 144 level is value. The big thing that's changed is we lack the cow meat to make hamburger, and so we used steer beef And now, that's starting to come more into equilibrium, and so that additional demand, that's what drove these cattle prices to very high levels, and that doesn't exist as much anymore. So I expect we'll probably be 144 and maybe back to 160 by Christmas. That'll be kind of the range over the next 3 to 6 months.
We really want to watch the 144 level if you got a target of 160, because that's been I know when they were at 137 you said they were going to 150, and they did. Now, Rich, one other thing that we've had a question about, and that is the price of eggs. Eggs have more than doubled in price over the past 5 or 6 months, and that's mainly due to the soybeans and the meal feeding. Is that correct?
Yeah, and that's part of the reason the basis is weak for corn in the Midwest, because so many chickens and turkeys were died or because they had disease they got rid of, and those are the big components. They are all meal and corn, and there's enough birds that have been gone away in the Midwest that it's affected the basis.
Okay, that's good. Very good. Well, Rich, I want to thank you for being on. We'll have you on in a couple more weeks, and I'll probably give you a jingle tomorrow, okay?
All right. Sounds good.
Yeah,
Take care.
Tell everybody in the family I said hope.
You bet. Trade well.
Okay, bye-bye, Rich. You bet. That was Rich Anderson of Anderson Capital Management, and giving us his input into commodities. And, boy, that fellow has got his ear to the ground, believe me. He's really a sharp fellow when it comes to this. He happens to be a rancher and a farmer and a trader and a money manager, and he's also a really good friend, which is also a very big plus. Okay, we're going to take a look at the markets here. We're actually selling off a little bit here in the market, much to the surprise of some of the people that must have been buying these stocks. Remember, markets that go parabolic on the upside go parabolic on the downside. We've never had an instance where that has not happened. Maybe this is the time, but so far we'll have to just let history tell us that Isaac Newton's law of motion, what goes up must come down, will most probably happen. I still believe that there's really big problems in China. These commodity prices coming down are telling you that they're not manufacturing anywhere near what they say they are, because if they did, these things would be absorbed. We don't have, really excess supplies of some of this stuff, and that's the main thing. We're talking about everything: rubber, tin, oil, coal, iron ore. Everything has just been, getting totally annihilated, and that's usually, a bad sign for the economy down the road. But maybe it really is different this time. I do believe that the Federal Reserve will be raising rates sooner than later. They've got a perfect storm to do it, and it would probably be friendly to the market, would be my guess, because of the fact that everybody's got money. So why not do it now? We're going to take a quick look here at the bond market here. We got a break coming up real soon, but we've just made a 61% retracement over the last 2 weeks range, up at that 152.08 level. We took out Friday's high by just a couple of pips, and now we're rolling over and probably going down to test it. Interest rates are going higher. It's a question of not if, it's a question of when. It's just a matter of when they do it. We have to get ready for it. We've been in a situation for 32 years of lower rates, and now we're going to be seeing some higher rates here within the next 6 or 7 months. I think they're going to be up around 3-4%. Okay, we'll take a little break here. We got the Dow down a bit right now, and gold down about $25, and the silver down about a dime.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direxion shares. To obtain a prospectus or summary prospectus, please contact Direxion shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I posted the chart of the, what do you call that thing? The VIX that they're saying doesn't mean anything anymore. We'll wait and see if that's the case, but, you know, there is no fear in the market at all. We'll have to see the market actually, and the VIX gapped up, which is sort of a surprise. We'll have to wait and see if it continues to do that, but we'll have to wait and see. We still got gold down $24, silver's down 7 cents. The Dow's up a little bit, the Nasdaq's up about 12, the S&P's up about a point, so not much is happening, you know, right now or not. The VIX index does mean something, folks. We've been watching this thing for a long time, and this is the time where you probably want to be getting ready to put some risk parameters on here, because when the whole world is on one side of the boat, that's when the captain has his biggest problems. So we've got breakaway gaps in all of these Facebook, Starbucks. I mean, all of these are gapping up, and that's how markets end, folks. I mean, they end that way. They don't begin that way. The problem is it's a flagpole scenario of parabolic move, and we don't know how high it's going to go, so you have to wait and see, how market action is going to help you. You just can't sell weakness in a market like this because it's had a tendency to turn around and bite you. Now, the New York Stock Exchange Index is not doing much. It's basically unchanged on the day. Actually, it's down just a fraction. So the overall market is still not going up. It's just those few stocks. And as I mentioned starting the show, there were 10 stocks in the NASDAQ 100 that are 48% of the value. We're looking at, Google, Apple. Apple's 14%. You had both classes of Google. That's another 7%. You're looking at 21% just with 3 stocks. Did you realize that on Friday, the price of Google was up more than 400 of the S&P 500 stocks? Think about that. The price of Google being up $90, its capitalization brought it higher than 400 of the 500 S&P stocks. Now, if that's not a bifurcated market, I don't know what is. But, pay attention, stay loose and see what's happening. Live every day in an attitude of gratitude. Amen.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.